The Bureau of Labor Statistics of the United States has announced its latest inflation data for the month of April. And the core consumer price index rose to 5.5% in line with estimates on a year-on-year basis. Headline inflation marginally cooled to 4.9%. Treasury yields stumbled following the report, further supporting the stock market, which has been worried about higher rates snuffing out economic growth. President Joe Biden held a key meeting with congressional leaders after the bell on Tuesday, but comments from both leadership on both sides of the aisle suggested that little progress was made. So the question is, how will investors on the Wall Street digest this data? How will it impact markets around the world? To talk about that and more, we have Nadia El-Bilasi, market analyst, Equity Group. Nadia, thank you very much for joining us this evening on ET Now on Rush Hour. Your first comments on the latest inflation data, 4.9%, which is less than 5% as the inflation number that was recorded in March. It's slowing, but only marginally. What do you think is the way forward, and how do you read this?
Hi. First of all, yes, the US CPI has dropped marginally lower, actually, from the 9.1% peak that we saw earlier on last year. So it is definitely a wider gap there. We've seen that inflation drop down by a lot, from 9.1% to 4.9% after a lot of 0.75 rate hikes, and now a 0.25 hike. So there definitely could be a pause. Actually, traders are now assuming and anticipating in the Fed meeting that there's likely going to be a pause. This is suggested by obviously the positive figure from the CPI, and also the NFP figures suggested otherwise last Friday, when the labor market still remains strong. So the Fed does have the capacity to increase rates furthermore. So now we wait and we see, but on the CME tool, according to CME, more than 80% of analysts and traders do believe that we're going to see a Fed pause.